Good morning, everybody. Good afternoon to our friends in Europe. I am Mark Sebastian, your only option. I'm joined by one Queen of the Candles, Alicia J. Leslie, and of course, Andrew T. Giovinazzi, the Viking of Volatility. Now, we're doing something. This is our ticker highlight show. Now, normally on this show, we look at one stock and one stock only and ask ourselves, do we want to buy this or do we want to sell this? But came to our attention this week with Walmart's off-the-charts earnings. While it's not worth more than Amazon, it was trading at a higher multiple. What does a higher multiple means? That means it's price-earnings ratio. So what the price is relative to the earnings per share was actually higher in Walmart than it was in Amazon. That persists today, which is something we wouldn't have imagined 10 years ago. So currently, the price earnings ratio on Walmart is coming in at a hot 48. 48. Now, to put things that in perspective, you're saying, well, is that high or low? NVIDIA, which is high, is only 55. So Walmart is trading a higher multiple than Microsoft, Meta, Google, trading a higher multiple than, I don't know about Broadcom. Nope, not Broadcom. But, a lot of the high-flying names, Broadcom or Walmart is trading at a premium. Even, Apple's 39, which, by the way, speaking of inflated PEs, Apple's got a 39 PE, which brings us to Amazon. And Amazon, which has historically always done everything they could to dampen their earnings. They would take on debt. They would do, amortize losses, anything they could do to not make money against how much revenue they were making. Amazon has traditionally done. So it always carried a elevated PE. And when you look historically, 44 is toward the lower end of Amazon. And for Amazon to be trading at a lower PE, basically what that tells you is that, they think AWS is fully priced and the growth in their online is not going to be in line with the growth in Walmart over the next 6 to 12 months. I like Walmart. I think it's a good stock. But when you look at, the competitive advantages of the two, right? Amazon has distribution centers. Walmart already has those built in that they've got their stores. So one of the advantages that Walmart has is that the front-facing store can be their distribution center, and can be a final point of contact. So, there are some competitive advantages in actually having brick and mortar. There's also the value of all that real estate. One of the reasons why Macy's, they argue Macy's will never go out of business is that the value of all that real estate is worth so much money. Now, Macy's will eventually go out of business. What'll happen is a private equity group will Sears-size Macy's. They'll take it under, say, we're going to capture value and overhaul the business. And then what they're going to do is just basically leak out the value of the real estate and murder the retail store. So if you enjoy Macy's, if you like going to the Macy's on what is it on Fifth Avenue? No. Maybe it is. If you enjoy going to the Macy's in downtown New York, they're big, huge flagship store, the one that was in Home Alone 2. Go and enjoy yourself because you don't have that long to enjoy it. Maybe 5 years. Now, getting back to Amazon, Amazon has automation, efficiency. They've got a lot of things worked out. They've done a lot of the model that Walmart is using has basically been already perfected by Amazon in a lot of ways. And now what Amazon is doing is just tweaking it. So you really can't lose on either of them. But if you looked at me and said, Mark, you have to buy one of these for the next 5 years, close your eyes. Which one of these is going to have made me more money? Amazon worth $2.2 trillion or Walmart worth $740 billion? Well, 5 years from now, Walmart will be worth over $1 trillion, but Amazon will probably be worth over $3 trillion. So my money is going to go into Amazon. They're doing some pretty heavy investment into their data centers. They're the third largest advertising platform. They were ahead of the game there. Kind of firing all cylinders. Wouldn't be surprised if Amazon is the next major company to also announce they're going to start returning capital to the shareholders. And at which point that will, you saw what happened with Apple when they started doing that. It just went straight up. And Amazon may be the next major company to do that. So long term, if you put a gun to my head, I would say Amazon. Near term, kind of a different story. Walmart has really outperformed Amazon. And then I'm going to pass this off to Alicia because she's definitely the better of the near term of kind of examining what's happening near term. But I want to look at the last 6 months, Walmart has more than doubled the performance of Amazon. You got a year still there. Walmart's doing about 80% better on a 2-year chart. That's where the differences pop up. So it's been in the last year that Walmart has really taken off. That momentum may continue here for a short period. So there might be another 3-6 months where Walmart continues to be the hot pick. Now, to answer whether it's Walmart or Amazon in terms of what's your hot pick, we're going to go to the Duchess of the Doji, the Queen of the Candles, one Lisa J.
Thank you, Mark. Before we get started, I would like anyone and everyone that needs to beef up their options education to please join Option Pit University.
Oh, good.
You
good
will
call.
get a free month of Option Shopper. So,
What?
yes, I have some personal.
Who greenlit giving a free month of Option Shopper with Option Pit University? Who did
Please
that?
join. Tons of 50 hours of education from Andrew, Mark, myself. I think Hansi has a few things in there. And the best education around in options. Join Option Pit University today. Last day to join on those Black Friday sales. All righty. And you get Option Shopper for a month. Walmart, as Mark said, has just been on a tear for a year now. Here we are, last December was in the $48. $48 last mid-December. My pitchfork is very steep. Going back to October 31st, Halloween, it has followed along very well in this channel. Now it's trading in the second channel. The RSI is showing us overbought, but as we can see, a stock can stay overbought as long as it wants. The RSI is your tool when it trades back down to 70. I shouldn't say trades, RSI doesn't trade, But when it moves down back below 70, that's your sell signal on RSI. On the median line, our resistance in Walmart up here on the pitchfork is at 93.89. Support will be down here 91.33. Lines up pretty well with my pitchfork support at 91, and below there will be 89. Now, it does still looks bullish. I would consider watching for a change in trend, getting a little toppy, and along with your RSI. But at the moment, still bullish. As I said, watch for a change in trend candle there for a little pullback. Very bullish chart, though, in Walmart. Amazon's chart looks a little more sideways. Definitely moving higher, but much more slowly. It is approaching the top of the pitchfork, which last 2 weeks ago couldn't hold it, couldn't close above it. So the target now in Amazon will be 215, and above there 216.37. I have support. I'm going to move my support to the top of that gap, or the bottom of the top of the top of the bottom of the gap at 208. Also bullish chart. They both have bullish charts. Let's look over here if we have moving averages coming in. No, they're both trading well above their moving averages. We don't have resistance there. I believe Walmart also, yes. Both clear sailing to trade higher. Watch for Amazon to maybe possibly double top there at that 216 level.
Hey, Alicia, what are your Walmart levels again? I want to try to get it squared away here for the trade.
Sure. As I said, both bullish charts. When you see something like today, make sure that doesn't turn into a bearish engulfing. The median line in Walmart comes in 93.86, Andrew.
Okay.
Support at 91.32 and 91 to 90.30, 91.30.
Okay.
All right.
Amazon, the MACD is trying to turn positive today. You get a little more follow through, you'll have positive bullishness on the MACD.
What are your numbers for Amazon?
Amazon support just below here will be 209.62 and then 208. Resistance 214.5 and then 216.38.
214.5 and then to 216.
38. Yeah.
Okay.
As I said, both bullish charts.
Okay.
And I will let you take it away, Andrew.
All right.
Well, let's before we jump into the vol trade.
Sure.
Let's pass things off to our newest member of the Opposite team, Hans J. Albrecht, the Imperial Overlord of Income. We're still working this one out.
Wait, Hans has a J initial too?
Yeah, everyone's a J. Except me, I don't have an initial. And Hans, you're if you're long Amazon or Walmart, right? So every week, because a lot of times we're talking about stock that people own, right? And so one of the things we want to do is start helping people create a little income or hedge or manage what to do if they own these things. So you're in. So Hans, you've got Walmart, you've got Amazon, or you got both of these. A lot of people probably have both. What are you doing here?
Yeah, look, if you've got both, you're lucky. And so I'd start off by saying, listen, being a good income trader is looking for income, but also understanding when it's time to kind of let the stock do its thing. And so I see these two stocks as very interesting. Obviously, overlap in their businesses in many respects. But Amazon for me is the future, right? They are this incredible blend of physical, digital. They've literally revolutionized. They rewrote the book on logistics. They're so good at, robotics, automation, all this stuff. Everyone was about 5 years behind, and then companies like Walmart started to catch up. So for me, Amazon is the now and the future. Well, and Walmart's a little bit more of the past, but they're starting to do today very well. So they've adjusted very, very well. So kudos to them, absolutely. But in terms of all these potential pivot points, I've got to give the lead to Amazon, and especially given the valuation that you were talking about. There's very similar valuations. For me, Amazon is kind of the one to consider. So in our note, which we put out, I said, look, I would let Amazon run a little bit, maybe to around 220, 225 before getting a little bit excited about selling calls, generating a little bit of income. I'd like to see that thing appreciate a little bit. I think it looks great, fantastic earnings, et cetera, et cetera. For Walmart, I think you've had a good run here. And so the idea is to really sort of go, okay, well, where can we generate a little bit of additional yield for our Walmart holding? And so I'd be looking at something around that kind of 95 strike, maybe in January. You're not going to be getting very much for December at this point, so you don't want to really kind of focus on that. A lot of them, there's not much meat left on the bone there, so to speak. And so if you kind of go for around a 95 strike in January, you're going to get a little bit of juice there, maybe 1 point, last I looked, maybe around 1.6% yield. And then you've got a little bit of potential for a move up as well. So, that could end up being, let's say, what we call a call away strike of maybe 3.4, 3.5%. Last I checked my numbers. So you have a little bit of potential for appreciation, but you're also starting to lock in some of those gains. And in essence, you can almost think of selling a cover call as being paid to put in a sell order. That's kind of a fun way to think about it. I'm going to put in my sell order. I'm happy to sell the stock here, but I'm also going to be given a little bit of juice for that as well. So kind of a nice way to play both of those. I'd say let one run a little bit, and then we'll kind of revisit depending on where option pricing is. And in the meantime, I'd be maybe getting a little bit more neutral, not bearish on Walmart. Funny, that's kind of a funny name where I thought, Walmart's going to do well when we all thought there was like a 25% chance of recession 7 months ago. I thought, well, Walmart's a name that's going to do great. Recession, of course, never materialized, but Walmart's done fantastic as well because they're executing, right? They're executing, they're mowing Target's lawn, they're starting to grab all those, upper middle class sales that Target used to get. Now Walmart's kind of grabbing everything. So they've really done fantastic. So by no means would I be getting bearish, but I think it's a nice time to generate a little bit of premium on that holding.
There you have it. I like it. And now let's pass it off to Andrew T. Giovinazzi, the Viking of Volatility. And he's going to talk about what he's seeing in the option pricing.
Let's see here. I will share my screen. Well, okay. This is pretty amazing. Like when did it split like what, $60? Let's see here.
Yeah, it's one of the few stocks split and went straight up.
It's split and then is up 50% almost from the split. So you've got this 90-day realized vol here. So that's a vol anomaly. So 90-day realized vol is just basically how the stock is trading. We're just going to make that go away because that's not helping us. And we're going to add like a little longer term vol here. And let's see what that actually gives us. So we do this. Yep, this. And you see something kind of funny here. What I notice is the longer, so with this stock run up, do you guys notice how these volatilities are not going back to the lows for Walmart? Sorry, yeah, for Walmart. So I find that kind of curious. Just normally you have earnings. We had a deep drop here, like after earnings. We have a deep drop here, and then Walmart went kind of straight up. Now, again, vol has dropped, but it is not like they're not cratering it down to the teens. So I would be more of a call spread trader there for if you want for a long trade. You maybe in the Jan cycle, something like that. Just because you're not really getting, like look at where vol's traded here. And now look where vol's trading. It feels like it's 20 to 25% higher. So traders are now in my buying calls, like, okay, we are not long enough Walmart. We underpriced all the calls. So I think, yeah, Hans, like this is a good premium, right? So if like a straight trade, I would look at a call spread here, like January. I think we're too close to 100 not to go to 100 eventually. Might want a little more time, but like a relatively inexpensive call spread, like a 90.
You're okay. I muted my.
Like a 92, 100, something like that for like $2. Something that would help generate some dollars. So I want you to see something here, everybody. Do you guys see all of this inverted skew up here in Walmart? Okay, this is Walmart, by the way. The fact that upside calls are being priced higher is freaking crazy, okay? Like that's not normal. Not normal at all. I would even consider going a little farther out with where the vol is, maybe even to February here. It's still like the $10 call spread is still, or the $7.5 call
The
spread.
Feb cycle will have their earnings, Andrew. The Feb cycle has their earnings.
Yeah. So maybe just like, I'll stick with the Jan. I think these 90, I like the idea of just the cheap call spread here. Like 92, 95. Spend $1. You got a little. Actually, this one looks a little better to me. Like so,
95, 100. I kind of like do that for
less
$1.10.
than $1. Like again, this is. I would stick to the call spread here because the nature of this stock is like moves up. Just a straight long call. I think you're just paying more money for it. So
yeah.
Mark likes the 95 par for an easy trade. I would
or
like
just a simple 95 call
money.
if you want to just buy a call. Now, what's interesting is on the cheap end, Andrew, pull up Amazon vol, and that is not expensive.
Yeah. Let's see here. And I think Amazon's another one that's suffering from this. What Leisha was like, it's trying to break out. It just hasn't made that move.
But it is not in that period of like where it's actually its vols are getting incrementally cheaper.
Right.
And so there actually is an opportunity. It's almost like the opposite of Walmart, which is crazy, right?
Yep.
Everyone's just overriding this thing. And there's an opportunity to buy a call. The stock's trading 210. The Jan 215 calls are only $6.70. Those have about 2 months to go. Amazon
what's our days
up
here?
$4 today.
$46. Yeah, not a very expensive call. Let's see here. So
On a $250 stock, $6.60. Not very much.
So we've got
I was just looking at that call skew on Walmart, Andrew, and you're right. It's extremely unusual for the 25 delta call to trade over the 25 delta put. And we're actually seeing that now. You're right. They're scrambling to pick up some upside.
Yeah, like we're not long enough Walmart all of a sudden.
If you're long Walmart, it is very advantageous to collar a position up here. Meaning buy a downside put, sell an upside call.
Or you know what? If you have margin, just 1x2 call spreads. It's like you can work into those for nothing. Like, is Walmart really going to go up $10 in a month? I don't see how
you say that, and then it did last month.
Well, I mean, it was last month, but now we have this month. You can make a funky fly out of it. I mean, there's stuff you could do. So
There's a
Jan
lot you could do.
17, I like the price on this. Jan 17, 215 calls.
That's an interesting thought, actually, Mark.
660.
If you're
What's that?
long Walmart, you could turbocharge it right now with a 1x2, couldn't you? You could kind of go pick up.
And so Leisha has a fairly tight stop on this here. I would say 209.62, right?
Yep.
So you're like $2. So you're like, I'll take $2 of risk on the underlying stock, which is only about $1 on my calls. And if it blows below that, like, I'm done for the short term. Because this is really, I think, a more Christmas style. For me here to Walmart, going out to Jan. Again, a little more duration with these type of stocks. I think that works better. I like the 92.5 call spread for about 209. Mark might want a one that's like simpler, but for me, I like
the 92-100 for $2. I would put in a $2 bid and wait on.
I would sell another call or like create a condor or something and kind of work into some a freebie.
Yeah, I know you would have 19 different options if you could. But don't worry, folks. I won't let him do that to you.
Mark will not do that. So if we're just going to go a simple call spread, again, using Leisha's resistance and support, January 17, to 92.5, 100 call spread, call vertical spread.
Yeah.
For
drop in a $2 bid, see if it comes to you.
A 210 top here, and then Leisha's the resistance and support levels are here, and this is what we got.
All right, everybody. Once again, Option Pit University. Today's the last day to get the special price and that 1 month of Option Shopper. Leisha has been killing it. I keep seeing all these amazing testimonials run through on what Leisha's doing. It's still time to join her option. You join today. You can join her on Wednesday in Option Shopper. By the way, your Option Shoppers is going to be Wednesday. So you've got time to join her special session on Wednesday, and you get all the amazing content in Option University. If you haven't joined, click the link in this chat or call my team 888-872-3301. Email us support@optionpit.com to take advantage of this incredible offer. All right, everybody. So for our Imperial Overlord of investment income, that is Hans Albrecht. Of course, the Vicar of the VIX, the Viking of Volatility, Andrew T. Giovinazzi, and the Queen of the Candles, Leisha J. Leslie. I'm Mark Sebastian. I am your only option. You folks have a great day and a great week, and we will talk to you guys soon.
Adios, everybody.
See you guys.